All right, let's go. A lot to talk about today. First off, market up over 200 points, and we are back up near our recent highs. Now, I told you this was going to happen, but anyway, there was a story that came out earlier today in Zero Hedge, if you like to follow that blog. I don't really follow it too much because I consider it to be a gold bug, hard money, Austrian type of perspective. It's always gloom and doom, but for what it's worth, there was an article or a post that came out on that website today saying that the Fed is considering halting its balance sheet reduction. And I will go on record right now to say that if this is true, and if they do this, it is a very negative development, and I'll explain why. Now, for sure, if they do this, and you see the market reaction today, the zombies are jumping in there, they're buying the stock market, they're selling the dollar, they're buying gold. These are all the wrong reactions, but they're understandable because they're being taken by the zombies who operate on a 100% basis of ignorance. They got everything backward. All right, just like they got QE backward. They said that was going to be so bearish for the dollar was going to disappear. I did my famous YouTube video right here on this channel in 2009 saying the dollar was going to embark on a long uptrend as a result of QE. I was right. They were all wrong. And then when the Fed started to raise rates in December 2015, I said the dollar would go down, gold would go up. They all said the opposite, that it was contractionary and this and that. It was negative for the economy, negative for stock markets. I said, no, that would be wrong, the opposite, and I was right. They were wrong. Anyway, so they're all reacting on this, but let me explain to you why. If the Fed decides to end its balance sheet reduction, that's going to be a bad thing. First of all, just as on a side note, last year the Fed sent around a survey to bank executives, and actually I think I talked about this in a video that I made, but I'll be happy to send this survey and send the link to anybody who's interested. Just go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. But anyway, the Fed sent out a survey to bank executives last year asking them what level of reserves, of system reserves, would you be comfortable with. Now remember, right now the level of reserves in the system is about 1.6 trillion. It was up as high as 2.5 trillion after the financial crash. And historically, for the last 30 or 40 years, it has never been over 800 billion. They ramped it way up after the financial crash. And, you know, they've been bringing it down for a while, but it's still 1.6 trillion. Anyway, in that survey, the bank executives themselves, they said to the Fed, we only want 600 billion. That's all we need. But the Fed is keeping it here at 1.6 trillion. Now you have to understand something about reserves. While reserves are non-risk assets and therefore do not require capital per se, reserves do factor into bank leverage ratios. And according to Basel III, which sets the standard, regulatory standards for banks worldwide, there's a statutory leverage ratio. There's a number of different regulatory ratios that the banks have to comply with, but the leverage ratio is the bank capital divided by total assets. Okay? I'm sorry, it's total assets divided by bank capital. And reserves are bank assets. So here's the problem. When the Fed adds billions and billions of reserves, in some cases trillions, right? The leverage ratio goes way up. And they have to stay in compliance with that leverage ratio, which means that either they have to raise more capital or they have to sell assets to be in compliance. When that ratio goes down, when the Fed drains reserves, that actually frees up the banks to acquire more risk assets, and the risk assets are where they make their money. We're talking about loans primarily. Okay? So the problem is, when the Fed ramped up all these reserves in the system, thinking it was, stimulating the economy, which is hilarious, and I've talked about this so many times, because how did it ramp up the reserves? It bought all these higher paying assets, right? The QE. It stripped out all the income that would have been earned in the economy from those higher paying assets. It held those assets for itself. And to show you how ludicrous, ridiculous the system is, the Treasury, the government, paid interest to the Fed, which the Fed then turned around and gave back to the Treasury. It's the most absurd scheme. And we look at this and think, oh, this is high finance. No, this is high idiocy. So the banks are saying to the Fed, they're begging the Fed, we only need $600 billion because we'd rather be involved in accumulating risk assets like loans, which pay us much more money. We earn a lot more money off of that. The Fed asked them, how much do you need? They said $600 billion. Meanwhile, here they're saying, oh, we think now we'll stay at $1.6 trillion. What's the point of doing a survey and then not even paying attention to it? So what does this all mean? If the Fed stops the balance sheet reduction right now, in my opinion, the whole macro equation reverses. And you know what my macro equation has been. That rising interest rates, balance sheet reduction is stimulus. Okay? It is giving back those higher paying assets to the economy. It is allowing the banks to accumulate risk assets, which they earn more money, and that means their capital base grows, and that means they can lend more. It's all positive. But the Fed has to keep doing this. And if it stops doing this, the whole thing reverses. That means your stock market rally stops, your economic growth basically stops or slows down, the dollar stops falling, it starts going up, gold stops going up, it starts to go down, the bond market stops going down, it starts to go up, bond prices. So all these things reverse. And I cannot believe, well, I shouldn't say that, I can believe that the Fed is so stupid. These idiots running the place are such morons that they would consider doing this. And why? This maybe was all precipitated by a tweet from Trump, once again, who said, hey, stop with the 50 Bs, meaning the 50 billion a month of asset reduction, of unwinding. So we'll have to see. If it happens, I could tell you this, initially, big zombie reaction like today, they're going to buy stocks, they're going to sell the dollar, they're going to buy gold. But then, that's it. You got to go the opposite way in that, because the reality is, if they stop that, it's really putting the brakes on stimulus, putting the brakes on the economy, putting the brakes on that macro outlook that, basically I've been following for the last 3.5 years. All right, that's it for today. Take care, everybody. Bye-bye.